FirstClub hits $255 million valuation with $55 million Series B. Peak XV and Safina aren't just adding capital, they're installing operational discipline that targets 40-minute delivery windows in Tier 2 cities within 18 months. That timeline collides with existing players who still rely on third-party logistics. Watch supplier payment terms shorten first. Once Kirana partners demand faster settlement, the margin gap between leaders and everyone else widens permanently. Smaller rivals face a choice between matching the pace or losing shelf access. The funding arrives right as regulatory scrutiny on quick commerce labor practices intensifies in Bengaluru. GitLab cuts 350 jobs, 14% of workforce. The restructuring expenses point to deeper pressure on GitLab's professional services margins than the headcount number suggests. Core maintainers who left will slow feature velocity on self-hosted versions over the next 2 quarters. That slowdown hands Atlassian a window to migrate enterprise teams still on the fence between the two platforms. Contribution graphs already show early drop-off in merge requests from affected regions. Expect support ticket resolution times to lengthen first, giving competitors a concrete proof point in bake-offs. Impulse Space raises $500 million Series D. The $500 million round size is the sideshow. The real story is how many existing launch contracts now carry in-orbit repositioning riders that competitors can't match. Lockheed and Northrop will have to decide whether to build equivalent capability or subcontract the service. Either path raises their per-mission costs inside the next procurement cycle. Smaller satellite operators gain leverage in negotiations once Impulse can guarantee slot adjustments post-deployment. The valuation now prices in capture of that aftermarket entirely. Strava targets scrapers ahead of IPO. Data licensing revenue now matters more to the IPO valuation than monthly active users. Insurance and corporate wellness partners who relied on scraped feeds must negotiate formal access or lose historical benchmarks. That shift raises Strava's take rate on every new partnership signed before the S1 drops. Garmin faces the same choice on its own user base if it wants to keep pace in enterprise deals. The scraper blocks will surface first in training plan accuracy complaints from serious athletes. Alphabet raises $85 billion in record equity sale. $10 billion from Berkshire alone signals how few institutions still get allocation at this scale. The infrastructure spend that follows will accelerate depreciation schedules enough to flatten reported free cash flow by late 2026. Microsoft must either match the pace in underutilized regions or accept capacity reservations that favor Alphabet's enterprise customers. Suppliers of power and cooling equipment gain pricing power they haven't held since the last build-out cycle. Expect the first margin compression signals in the 2025 CapEx footnotes. New Limit closes $435 million Series C round. Founders Fund rarely writes checks this size without a clear path to clinical data in the next 2 years. That timeline puts pressure on peers like Calico Labs to either match the spend or risk losing key researchers mid-trial. The real constraint isn't cash, it's patient enrollment slots. Whoever locks up the first 1,000 volunteers for age-related reversal studies gains an 18-month data moat. Smaller biotechs without similar war chests now face a binary choice: license their IP or watch valuations crater. Endra raises $50 million Series A. A16Z's bet here hinges on reimbursement codes shifting within 24 months. Once payers cover the scan, every gastroenterology practice has to decide whether to buy the device or refer patients out. That choice directly hits the margins of traditional ultrasound makers like GE Healthcare, who must now accelerate competing scans. Endra's hardware gets deployed first in the highest volume clinics, locking in data that later entrants cannot replicate. Watch the next 2 quarters for partnership announcements with hospital chains already frustrated by biopsy wait times. Mecca secures $60 million Series A. Union Square Ventures is placing this bet on the assumption that manufacturing lead times for custom actuators will compress by half. Mecca can now scale its pilot lines before legacy suppliers like Rockwell Automation update their own roadmaps. The second-order effect lands on contract manufacturers who suddenly face demands for smaller batch sizes. If Mecca hits its delivery targets, those shops lose the high-margin retooling work they counted on for 2025. Rockwell must decide on an acquisition within 18 months. Intuit plans 3,000 job cuts in July. 17% of the workforce disappearing means support response times lengthen for the mid-market customers Intuit has spent years courting. That opens a window for Xero to pitch faster onboarding to finance teams already annoyed by ticket backlogs. The cost savings get reinvested in product, but only after the customer churn shows up in next year's numbers. Watch the Q3 earnings call for any mention of retention metrics slipping. Xero's sales teams are already preparing targeted outreach campaigns. Snap reduces headcount by 1,000 jobs. $500 million in savings resets the burn rate, yet the remaining teams still need to show revenue growth. Expect the product group to push more sponsored content into Stories and Spotlight to close the gap. TikTok's ad sales force will use this moment to approach the same brands, arguing Snap's reduced engineering bench means slower feature parity. The agencies making those decisions have already started reallocating budgets for Q4. TikTok now has the opening to lock in those accounts before Snap recovers. eBay acquires Depop for $1.2 billion. Depop sellers gain immediate access to eBay's negotiated carrier rates. That undercuts every pure-play fashion resale platform on fulfillment margins. Poshmark has to decide whether to subsidize shipping or cede volume share within 6 months. Etsy pockets the cash, but exits the segment just as second-hand clothing volumes accelerate in Europe. The buried detail is how many Depop data partnerships transfer to eBay's recommendation engine by early next year, shifting bid dynamics for clothing keywords across the platform. Cisco cuts 4,000 jobs in restructuring. Even with revenue at an all-time high, the restructuring targets layers that once protected software margins. Channel partners must now absorb more post-sales work or risk losing deal registration privileges. The second-order effect shows up in how many mid-size accounts move their refresh cycles to Juniper or Arista over the next 4 quarters. Severance costs stay low because most roles sit in lower-cost regions. Distributors already report early signs of bundle negotiations stalling until the new org chart settles. Dell workforce drops 10% in fiscal 2026. The 10% cut lands heaviest on the sales organization that supports large deals. Hardware procurement teams now navigate fewer dedicated account managers, lengthening sales cycles for custom configurations. Competitors like Lenovo gain a window to poach those mid-tier relationships before Dell restaffs in lower-cost centers. Severance accounting spreads the hit across 2 fiscal years, softening the immediate EPS impact, but pressuring guidance when growth returns. Procurement officers should lock in multi-year pricing before thinned teams push list prices higher. Coinbase cuts 700 jobs, 14% of staff. 700 roles vanish as the company shifts engineering spend toward core infrastructure. Payment processors and banking partners will see slower integration timelines for new features until the remaining teams stabilize. The efficiency push also means fewer dedicated compliance staff, raising the risk of delayed product launches in regulated markets next year. Expect the first visible lag in international expansion announcements by Q3. Banking integrations that once took 2 quarters now stretch toward year-end for anything beyond basic listings. Meta plans additional 8,000 layoffs. The latest round still leaves headcount above 2021 levels, despite the reductions. Data center operations lose critical institutional knowledge first, raising the odds of power or cooling incidents during peak load periods. Suppliers of networking gear now face renewed demands for volume discounts as Meta squeezes OPEX harder than CAPEX. The May timeline means those negotiations open before most fiscal years reset. Expect fewer proof-of-concept deals for new switch architectures until the dust settles on the final org design. Oracle cuts up to 30,000 roles. Layers protecting the old database lock-in just got thinned. Sales and support roles tied to large migrations face the deepest cuts. Mid-market accounts will route new RFPs through third-party consultants within 6 months instead of direct channels. Renewal pressure builds once those consultants start recommending hybrid setups that bypass the vendor's services entirely. LinkedIn reduces headcount by 5%. Recruiter subscription teams absorb more than their share of the 5% trim. That shifts emphasis inside Microsoft toward bundling LinkedIn data into Dynamics and Office renewals by year-end. Direct ad deals lose priority as first-party graph targeting takes over. Agencies relying on standalone campaigns will see pricing tighten once the sales headcount stabilizes lower. ASML reduces workforce by 1,700. Service and installation groups that keep EUV tools live took the largest share of the 1,700 reductions. Foundries now accelerate plans to staff their own maintenance crews ahead of next year's capacity ramps. Contract negotiations will turn on who absorbs downtime risk when tools go down. Smaller specialists gain a wedge to offer on-site support that used to stay with the equipment maker. Ericsson cuts 1,900 jobs. RAN optimization talent left first in the 1,900 reductions. Operators must now expand internal teams or turn to niche vendors for the same network tuning work. Next software upgrade bids face harder scrutiny on both price and promised performance gains. Carriers already running mixed vendor networks gain leverage to demand better terms across the board. Wix plans 1,000 position cuts. Customer success and template teams saw the heaviest cuts aimed at profitability. Agencies managing client portfolios now evaluate alternatives with stronger onboarding support. Churn will surface first among accounts running over 50 sites once renewal cycles hit without dedicated reps. Webflow and Squarespace pick up inbound interest that previously defaulted to this platform.